take a look at the SPY report, take a look at what we perceive the week is going to be like with the SPY, the IWM, and the Qs. Last week, on the 8th actually, that would be last week, Thursday, I believe, I said, hey, listen, watch for the resistant levels at 204.36. Now, we were coming into the open around that region when I did tweet that, and notice it came down just a little bit and then accelerated right up into the space. We are in a very jagged momentum, and you can tell that when you look at waves completely retrace themselves or almost completely retrace themselves. When that happens, level to level trading is best, and it is really a bad idea to buy a breakout or sell a breakdown. Now, in some spaces that works just fine, but in general, you must wait for a pop after a drop to get yourself involved in a trade to minimize your risk thresholds and maximize your performance event. And a lot of us forget to do that because we are afraid that we're going to miss out on the move, when the fact of the matter is, if you position yourself properly at any important support or resistance level, there is a very high likelihood that your chart will come back into that level, test it, and then make a decision. And it is at the retest that we can see what's happening with the charts. So that being said, it in general ignored my 204.36. We ended all the way up here at 205.74. If you bought that breakout because you're pretty sure this is some kind of bottoming event, you were very hurt on the following day because all we did was generally cascade down into, what do you know, rounded about this 204.30 area. As a matter of fact, where did we close? 204.25. So we are sitting right around that very important level. And so the chart is trying to make a decision. The problem is the moving averages are very, very tightly squeezed together, or at least they're trying to squeeze themselves together. And when momentum is adrift, when we have technical indicators that are floating around the midline instead of being up high or down low, it does tell us that no matter where we break out from, we are going to come back to retest that area. So there really is no rush to get involved with a trade if you're thinking about trading a relative trend, right? If you're going to find 4 days where it's going to move down or 3 days when it's going to move up. But what we've fallen into here with up, up, down like that is it's fallen into a very unorganized pattern. And we can only trade organized patterns, right? Things that give us higher highs and higher lows. I mean, we could trade the other ones, but that's if we want to lose money. And I don't think any of us want to do that. So, that being said, what we want to do is take a look at how the chart behaves on Monday. I get the feeling that we're going to have a pretty interesting week ahead of us. Don't quite know the direction, but I'm pretty sure something's going to resolve. What is my strategy? I'm always waiting for the relative pullback to take the long. If it looks very, very strong, I will wait for that one candlestick pullback and then get excited about it and go forward. If not, I'm going to let it rotate. I have a lot of patience that I developed. I did not used to have that level of patience, but I do now, and it really ends up working out quite nicely for me. So we've got our levels to take a look at. This quadrant motion that is really measuring this relative wave has us sitting right at the midpoint. We're in the third quadrant essentially, and so if we are in some sort of sideways pattern, we're going to continue to reject this region and perhaps reject this region, keeping us in between that area if we begin to build pressure to the upside. The reverse will be true if we are building to the downside but still sitting in a trend. We're going to lose the midline, step into the third and fourth quadrant if we're looking at it upside down, and that's what we'll do there. If we take a look at the IWM, we've got the same kind of pattern. Here's the quadrant line, right? It's sitting underneath that midline. Okay? And so ultimately, for us, we are looking at a break space of about 118.80 and 116.84. So if you're saying to yourself, wow, you know what, I need to find some sort of momentum event that helps me take a long, you need to look at where your stops are going to be in order to minimize your risk. Do you see how big these candlesticks are? They're very, very big. If you have tight stops, you're going to get blown out of the trade. And so the best thing to do if you say, I've got to have a tight stop, is to watch the cycle and wait for it to come into support and resistance. Right now, this chart is extremely messy to me, but again, the technical indicators have us sitting in neutral zone territory. Take a look at the line right here. You can see all this arguing all the way across. This is no different. It is in a choppy space. we have a bearish engulfing after this big bounce and the gap up. Do we anticipate the gap to fill? Yes. Gaps fill by and large, okay? Particularly in broad indices, gaps will fill. Sometimes it takes a little bit longer than other times, but they do. And so we're going to be watching this area of 117.30 to see if it slips down and fills that gap. If it fills the gap and momentum shifts, you know, we're going to move back up into this space. My thought is that we really are going to have a pretty solid sideways action, but the action's going to be brisk. It's going to be big candlesticks, and they're going to be consistently reversing because we are in a very unorganized pattern. Let's take a look at the Qs. Hear the snowmobiles outside. I'm not really sure if you guys can hear those, but they are out there. Okay, so now if we take a look at the Qs, again, here's our quadrant, doing the same sort of thing, being caught in this third quadrant area here. Same sort of reversal patterns. Very, very noisy, folks. Momentum is not slanted in either direction. And if momentum is not slanted in a direction, if you take a trade, you may as well be rolling dice, because there's nothing giving you an edge to tell you the push is coming. Remember, everything is like a snowball that packs. Of course, I'm saying that because it is the middle of January and there's a ton of snow outside. But if you think about all moves having to have some sort of inertial event that shoves it out of a state of sideways chatter into motion, the underlying technical indicators give you a good solid view of that. If you don't see it, it's not there. If it's not there, you're going to have chop. It's as simple as that. It really is as simple as that. So focus on those particular events. Realize that you've got nothing really slanted in your favor by and large to give you directional momentum, or at least as far as I can see, right? What does my gut say? My gut says we've got a little bit of rotation action on the horizon, but I don't trade my gut because, frankly, my gut is wrong a lot. So I just trade the pictures. And right now, the pictures pretty much a little bit like a close-up view of pointillism, which is nothing but noise. All right? So let's let the market settle out, and then we'll be able to take a look at what we have in terms of continuation. Good luck for the week.